Are high interest rates really keeping buyers out? Let's introduce. Are high interest rates keeping buyers out of the housing market? That is the question most people are asking now. Everywhere you look, people are saying rates are too high, I'll wait. But here is the problem, that the thinking is not about interest rates alone. It just makes sense to decide whether you want to buy or not. People bought homes at 18%. They bought homes at 12%. They bought homes at 8%. I personally bought my first condo at 8.25 on just a 5-year arm, not even a 30-year fixed. So you have to look at the full picture and design. And a serious buyer does exactly that today. It is not about the interest rate. It is about the complete home ownership map, design. So the interest rate does not stop the market. It only stops some buyers. And so affordability is the question. When rates go up, payment goes up. Some buyers qualify for less. Some buyers get nervous. But does that mean home buying stops? No. The market adjusts. Buyers adjust. Sellers adjust. Lenders adjust. Strategies adjust. What really happens is that casual buyers leave the market first. Serious buyers stay active because they need life changes. They need to buy a home. They are waiting for the strategy. People get married, families still grow, jobs relocate, parents still want better schools, investors still look for opportunities, downsizers want to move. If the mortgage rates went up, the buy and the sell both will get impacted. So with 18%, people get shocked, were shocked. But now at 6%, 7%, people are saying rates are high. So people purchased rates at much higher rate. In the early 80s, mortgage rates were around 18%. And yes, people were still buying homes. Why? Because they understood something very important. The rate is only one part of the equation. The home inflation, tax benefits, appreciation, down payment, loan structure, long-term ownership all matter. A high rate may feel painful today, but the bigger question is this: what happens if home prices keep moving? What happens if rents keep rising? What happens if you wait 3 years and the home you wanted costs significantly more? What happens if rates drop and every buyer rushes back into the market like 2020? Waiting for a perfect rate can sometimes mean paying a higher price later. It's assured that the rates will be high. Prices will be high when the rates drop. So I got my first home on an 8.25 arm. Today many people would look at that and say, oh, that's too high. But that rate did not stop me. Why? Because I looked at the complete calculation. I looked at what I could afford. I looked at my income, long-term plan, looked at the property's potential, looked at the fact that part of my payment was going towards principal and the rent was just disappearing without appreciation. And here I'm getting appreciation, which is only available to homeowners. That's the difference between reacting emotionally and planning intelligently. Buying a home is not just a monthly payment decision. It is a wealth building decision. The holistic home ownership calculation. This is where it steps in. This is where most buyers make the mistake. They compare rent, mortgage payment and stop there at the top line. That's incomplete. The real home ownership calculation should include your monthly payment, your down payment, your cash reserves, your tax benefits, your principal reduction, your expected holding period, your rent alternative, your income potential, your ability to refinance, your appreciation, your lifestyle needs, your family goals. When you rent, 100% of the rent is an expense. But when you own, part of your payment may be interest, maybe taxes, insurance, but it is also reducing your debt. That principal portion is not the same as rent. It is building equity. Then if the property appreciates over time, your return is not based on just the home value. It's actually the amount you invested as down payment, and that's called as leverage. This is why you should not just focus on the rate. You should ask, what is the full ownership design? Rate fear creates opportunity. Here is the part many buyers miss. When everyone is afraid of high rates, competition can be lower. That can create opportunities. You may have more room to negotiate. You have more time to inspect. You may have multiple offer situations. You may find sellers who are more flexible. You may be able to buy a better property than you could in the lower rate of feeding frenzy. And if rates drop later, you will refinance. But if home prices jump, because everyone comes back into the market at the same time, you cannot go back and buy at yesterday's price. That is why the smartest buyers do not wait for headlines. They run for design, numbers. And if this type of practical thinking helps you, make sure you subscribe to my channel. The goal is to help you make better real estate decisions with clarity, not fear. So, high interest rates, are they keeping the buyers out? They are keeping some buyers out, but they are not stopping serious buyers. The real issue is not interest rate alone. The real issue is whether purchase makes sense, whether you look at the complete picture. Affordability matters, cash flow matters, reserves matter, but so do tax benefit, principal reduction, appreciation, inflation, rent increases, and long-term wealth creation. Do not let one headline number scare you away from that decision, which could change your financial future. It is not just about the rate, it is about the plan. Before you decide to wait, do the full calculation. Look at the whole picture. Understand what buying means today, what waiting could cost tomorrow, and what strategy will help you take a long-term position. Because the right question is not, are rates too high? The right question is, can I design home ownership intelligently in this market? Thanks for watching. See you on my next one.